Good afternoon, everyone. The volatility continues today. A lower session somewhat overnight. Grain futures look like across the board we're going to close higher on the week. More importantly, soybeans at the moment, 20 cents higher on the week. Corn about a nickel higher on the week. Wheat futures still, but the way things are so crazy, they're lower on the week for now, but that could change here in the final 30 minutes. As you know, we had the early run-up on Monday in review on South American weather. And then everybody was all worried Tuesday and Wednesday about our pathetic export sales pace as of late, and that we'd have horrible export sales numbers Thursday morning. And that kept the market at bay for corn, beans, and wheat. And, of course, those numbers came to fruition. We did have garbage export sales. But here's the catch. We need to have garbage export sales from here forward to September 1st because the government, the USDA, their carryout numbers are still generous if we don't continue to have garbage sales going forward. And that's not likely to occur with China's continued appetite to buy grain anywhere and everywhere in the coming months, especially with corn, where they're rumored to come to the U.S. probably for another 2 to 3 million metric tons. So keep in mind, to get from our old crop year, we've got to get through the end of March here yet, which is most of the month, April, May, June, July, August. I did that for a reason. Set them individually. 6 months. That's a long time when we've already sold 98% of all the beans the USDA says we're going to sell for the year and 88% of all the corn the USDA says we're going to sell for the year. You know they're wrong because even if we have yesterday's garbage data, we're going to have a hard time matching what the USDA says. So we're working in a world where these grain prices, they are not done going up. And now South America, Argentina has not even begun yet to end the prospects of their yields collapsing because we're going to go into the weekend. Yesterday afternoon is their weekly condition ratings report dropping another percent. They're down to 10% in the good to excellent category. The poor category has grown to 20% and will likely be 25% next week. And most of the crop is just hanging in there now. And it's going to be 100 degrees with no moisture for the last few weeks. No moisture essentially in the next 10 days. There's hope. Maybe rain in the 14-day. That's what's keeping the market from going vertical and making new contract highs. But when we go through the weekend, we come back Sunday night, I don't think it's going to be one of those 3 to 5 higher opening, 3 to 5 lower opening. It's going to be one of those sharply higher openings Sunday night into Monday. And it's going to be based off of, is there any relief coming for Argentina? Because after the hundreds this weekend, they cool off into the upper 80s, lower 90s, a little more seasonable for them. And if that rain, which is out there in the 14-day model, doesn't appear viable yet, they're going to be hell to pay because the yields in South America are collapsing and the whole world is wired so tight. That's why you got old crop beans at $14. And now, for the first time in a long time, today marks something like the 7th day out of the last 8 days closing over $14. Because the world has tightened up. Brazil had a late crop that come up a little lighter than they thought, and now it's been raining nonstop during harvest. A lot of these beans are damaged, high in moisture. They're not exactly premium beans, so to speak. And Argentina's bean crop is off considerably. And keep in mind, it's not that Argentina exports a lot of beans. They really only export about 7 million metric tons of their total production, north of 45 million metric tons. They do the making more profit off of crushing it, and they sell the meal and the oil. Value added is what they do with it, and they sell meal and oil. But either way, those products are a suspect problem for exporters to try to get the products, and if they can't get it from Argentina on a smaller crop, then they got to come to the U.S. or anybody, or just frankly bid it up, and those that get, and those that can't afford can't have it. So right now we are sitting on the highs of the day for November soybeans. 14.30 last on the May contract, up 19.5. Keep in mind the high yesterday was 14.38 before the Fed blew everything up with the U.S. dollar exploding to new highs for the calendar year. And so everybody thought, that's just going to really hurt our exports now. Well, it just paused the market as it's heading higher because it's not about the dollar anymore. It's about total supply. July beans up 19.5. 14.5. New crop November beans within 7 cents of their contract highs. We're up 14.5 cents at 12.45. The bean oil on fire. New contract highs again today, up $1.25 at 51.96. Another new contract highs in the corn market. December corn, new contract high, up 6 1/4 right now, 41 3/4. Whereas May corn coming alive, holding some major technical support they had to hold in the 430 range that did hold up. now up 15 cents today on the May corn, 5.47 and a quarter. July up 13, 5.35, as of course the Brazilian corn crop is at risk of getting planted on time, and it's in some wet ground. It's really tough looking. It's like 2019 up here in the United States. But for now, the corn also coming back alive. Wheat catching on the coattails of the soybean and corn market. We have Chicago wheat May up 8.5 cents, 6.59.5. July up 7.5 at 6.48.5. Kansas City wheat made a new low for the start of the month here this morning, touching some trend line support for those that like to connect dots on the charts, as there were some showers in the dry areas down there, but 30-hundreds, I wouldn't get too excited about it. Kansas wheat now up 8 cents, 6.29. July up 8, 6.34 and a quarter. Minneapolis wheat, the May contract up 6.5, 6.50. July gaining 6, 6.55 and 3/4. New crop September up 5.5 at 6.60, and that is still away from their contract highs made the last week at 6.72.5 for new crop September wheat. As dry as it is, I think that prospect of those numbers getting taken out to the up top side is quite likely, especially with the row crops lighting up again. Cattle futures, the April cattle contract has been something down. How do I say this? They've been down over the last 2.5 weeks. They've had a lower high every day for the last 13 days, but they leveled off this week. They just quit going down, but every day it's a shallower rally. Well, they're up today, but cash is dead in the water. We're still trading that 114 area, been there for 5 weeks. Choice would continue that slow decline that we knew would happen after the cold weather would dissipate and the Packers could catch up. Choice down 75, Select down 95. Cash trade, some will probably finish up after the close, but they're working on a lot of formula cattle this week. So April cattle day up 60 cents, 119.15. June cattle up $1, 117.97. As we go on to October, up 50 cents, 121.42. With the December cattle contract not far from contract highs. We are at 124.37. That's up 30 cents. Feeders, even with higher grains, because deferred live cattle support, we have April feeders up 65 cents. 139.62. May up $1, 143.65. August up 47. 152.42. Hogs recovering early weakness. We're up 5 cents on the April hogs today, 87.35. June up 82 cents, 95.55. Now the gold market, another new calendar year low today and almost a 52-week low. Down $1.50 right now at $16.99.20 with a $16.83 low. Jobs number this morning was very friendly. Basically, 379,000 restaurant jobs were added. Most of the job bill was not manufacturing or non-farm payroll. It was all tied to bartenders and waiters, but a 379,000 job jump in February with obviously large states opening up, and Texas is included this month. On March 10th, restaurants are going to 100% capacity versus North Dakota, which is still 50% capacity. I guess it's something our governor likes to honor Bill Gates with, even though he let the mask mandate go away. So with that, we do have the gold under pressure again today. Silver down 15 cents, 25.31. Bitcoin 48,503. That's up 400 points. And crude oil, new contract highs again today, in spite of what the U.S. dollar did yesterday, as the OPEC meeting ended. Much different than what they thought at the beginning of the week. The planned for increase of production of 500,000 barrels by OPEC on April 1st, that's out. And Saudi Arabia's individually done a 1 million bushel cut. They said they were going to bring that on here in the second quarter. They've said now they're going to wait. And so the market is surging higher, with the oil market up $2.48 at $66.31. The gasoline up 6.5 cents a gallon, 206.5, with heating oil up cents a gallon, 194.73. Any questions, you can find us, and that's at heartlandinvest.com. Thanks for listening, and have a profitable day.